Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see from the very strong candle, the Australian dollar is outperforming after hitting a fresh 15-month high and roaring through the 68-cent handle following a blowout December jobs report which showed 65.2 thousand jobs added and unemployment surprisingly fell to 4.1%, well below the RBA's 4.4 projection, reinforcing the view that the labour market remains tight. The data has sharply lifted bets on a February RBA rate hike, with prices jumping towards the 55-60% area, though next week's inflation CPI release will be decisive, as a core print above 3.2 would likely seal the case for a tightening, while a softer outcome could keep the RBA on hold. Next up is the US PPI data. Meanwhile, as eyes all turn to the data from the US, the strong Q3 GDP growth continued. Along with that, with the steady PCE inflation at 0.2%. And therefore, the resilient labour figures reinforced expectations that the Fed may hold rates in January, but did little to lift the greenback as markets increasingly look towards a first rate cut probably by mid-year. But I'm not sure about that if President Trump gets his way. Overall, though, the market is still likely to find a little bit of trouble as it heads now towards 68.55. I feel that we are getting to an overbought condition. We've way extended on the rally, and it's time now for a correction, possibly a pullback towards the level around 67.5. The euro, well, after posting its first engulfing candle, posted its second engulfing candle overnight and rallies on and now looks closer towards the level that could be reachable at 118. Keep an eye there, it was rejected before around 118 figure 40, and we may see a similar pattern. Nevertheless, technicals have firmed up, but there's no trend from the ADX. Makes me a little bit cautious towards the top side, with any pullback seen around 116 figure to 116.5. Turning to dollar yen, it still remains somewhat steady above this trend line after the Bank of Japan left its benchmark rate unchanged at 0.75%, as the investors digested a cautious policy message and looked ahead to the governor guidance on timing and pace of any future rate hikes. As many as now keep an eye on this level, we could actually be seeing a shoulder head and waiting for the right shoulder. If so, a measured move brings us down towards the 155 area, where I am still calling. Let's see if it emerges. Well, as we turn to sterling, a second engulfing candle just comes through and now looks towards this key level that was rejected recently at 135.10. If we do get a break there, then that could see an extension on to the highs around 136. Well, having roared through 4,900, we are nearer to the target of 5,000, which was and has come around rather quickly. Along with that, silver did post a high around $99. Overall, though, we still may see the rally continue and hit the 5,000 before any correction. And I think with the correction being quite severe, considering the monthly chart, this is a very strong Marubozu candle, and therefore bullish or bearish markets perform relatively hard, but a bearish market can come through rather aggressive. Wrapping up with oil, but the market still holds, I feel, to the target around $61 to $62 a barrel, and still maintain above the key area around 58. Should keep it on track. Keep an eye on these technicals though to reinforce the upside call before any profit taking. Well, that's a wrap. Thank you for joining me, and as always, look out for the Insta report, and I hope you enjoy the great start to the long weekend.